Bless Squad, what's going on with y'all, man? It's your boy Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And today I'm here to talk to you about position sizing. Position size is going to be critical to your investing journey. If you have not made any money in this market, if you're not making any money, it's probably because you don't know how to position size. So we're going to talk about it today, and how to position sizing to your trades and how to make sure you're managing your risk in these plays. So first off, what is position sizing? Position sizing is simply when you get into a trade and you have a certain amount of money into the trade because you don't want to risk your whole account. And there's a calculation on how to do this, and we're going to break it down in this video right now. So when you get into particular trades, you're going to want to identify three different levels. You're going to want to identify your target. You're going to want to identify your entry point, and you want to identify your exit point if things go wrong. Those are the three things you need before getting into a trade: your entry, your target, and then if this goes wrong, where am I getting out? So I pulled up the SPY, the SPY. This is the overall market of the S&P 500 index. And this thing has been trading basically sideways, as you can see. It's been going down, it's been down, but it's basically been trading pretty much sideways. And this is a great chart to look at if we were trying to identify simple support and resistance. So if you haven't checked out that video, make sure you go check out that video on how to draw support and resistance. I did a video on that. But for this one, here is our support and resistance lines. These are these blue lines here. And this is basically where the stock has been bouncing. So as you can see right here, I highlighted a couple levels. The stock bounce here, stock bounce right here, right here, right here, right here, right here. So we know that is a support and resistance level. Also, you can identify right here, boom, boom, boom. So another support and resistance level. Again right here, again up top there, and also down below. It's showing basically what it is. It's where the stock is reversing on this chart. So what we want to do when we're identifying entries and exits is we want to put our exit point, our stop loss, the place we're going to get out if everything goes wrong on this trade. If we're looking at this particular trade here, we want to put it below the support level. Because why do we want to do that? Is because if it gets here and it breaks below here, that means it's breaking this trend. And we know it tends to bounce off of this key level right here. It's bounced on this level 1, 2, let's see, 1, 2, 3, 4, 5, 6, 7, 8. It's bounced here a lot. So we know if we put our exit below it, we know the odds of us being wrong are going to be low, and it protects us. So it can break down, but we want to make sure we put something right there for protection purposes. That means our trade, we know our trade is invalid based off of that. So this is where our stop loss is going to be. If it gets here, we know we're wrong. We know this stock probably is going to go up, and we need to get out of this trade because it's probably going to trade lower and lower in this scenario. So that is going to be our exit. We put our exit behind some type of furniture, behind some type of resistance support level. Next, we want to identify our entry. Entry, of course, is going to be where this, our entry price, well, this is going to be where the stock is currently trading at. Maybe you have an entry point that is going to be lower. Let's say you want to get closer to this key level in particular. Maybe that will be your entry point. But for right now, for this given video, we're going to make our entry point where the stock is being traded. Next is going to be our exit point. And our exit point, how you determine that is, again, you're going to use your support and resistance level. So we're going to look at our next key resistance level. We do have one right here. So let me pull that up. Didn't draw that. So we do have one right here. And you can see that because it bounced one right here. It stalled out a little bit right there. It bounced right here. It bounced right here. And it's also bouncing in this general area right here. So it's not perfectly right there, but in that general zone of 410 is where the resistance level is. And resistance levels aren't going to be exactly a perfect number. The market doesn't trade like that, but you're looking at general zones, general areas of interest where a lot of trading takes place and a lot of reversals occur, and it occurs a lot right in this general area. So those are our three levels. Those are our three numbers that we have when we're planning this trade. So we know if we get in here, we're betting that the stock will not go below this line because we have this protection behind us with this support level, and we are putting our stop loss right here. We're getting in right here at this entry point because this is where the stock's trading, and this is where we believe the stock will bounce based off of these, based off the previous history here, where it's bounced multiple times here. That's what we're betting this trade on. We're betting on the bounce of this support, and we want to get out right here around 410, 416 zone area because this is where our next resistance level is, and it tends to bounce and reverse in this level. So that is how we are determining those levels. So after we have everything like that, we want to position size into our trade. And how do you do that? What you're going to do is going to use a simple calculator. This is what we do. You can simply just go to Google. I typed it in already. They have position size calculators for stocks. If you're trading anything else, if you want to trade Forex, crypto, they have trading calculators, position size calculators for that as well. But just click on this. There's a whole bunch of different apps you can use. You can look on the App Store and find a position size calculator. But simply, it's just a simple calculation where you're determining the numbers that we already have here. So as it sees here, the first thing you want to look at is your account value. So this is the total amount of capital you have in your total portfolio. So for this example, let's say we have $10,000 in our portfolio. Maybe you have $1 million, maybe you have $10 million, whatever. But for this given example, we have $10,000. Next, we want to determine the percent of account we are willing to risk. This is the percentage of your total capital you're willing to risk in a single trade. I recommend people do 1 or 2%. Risking more than that can really damage your account. I know there's some traders out there that like to risk 5%, but I really recommend doing no more than 2. On average, most people do 2% of your account that you're willing to risk at a time. So with this $10,000, you're willing to risk 200 of it. Willing to risk $200. So 2% is going to be your total risk for this given one. Next is going to be our initial protective stop, the price that you plan to exit at a loss if you are wrong. So we already determined that. Let's pull this back up. We determined that our exit, where we're getting out if we're wrong, is going to be, let's say 186.50 just for even numbers. So we're going to get out at 186.50. Excuse me, 386.50. 386.50. It's going to be our exit. And our entry price is the price that we plan to enter at. Can't remember that was going to be, that's perfect. It's going to be $3.99. So $3.99. That is going to be our entry price. And with a $10,000 account, we're risking only 2% of our total account, our total capital. And we know we want to stop loss at 386 and we want an entry price at 399. All we're going to do is compute this, and it's going to tell you how much you are able to buy of this given stock here. So what you can do, the max shares you can purchase is 16 shares. And the reason why you can only purchase 16 shares is if those 16 shares of $3.99 drop all the way down to $3.86, you will only lose $200 of your account. So what it's doing is only putting $6,000 on the line for you to risk that 200. It makes your percentages simple, where you're not destroying your whole account if a trade goes wrong. It's managing your risk, and you're not putting your whole account portfolio at risk. And what you can do is, now that you have $6,000 of that 10,000 in this first trade, you can now find a second trade that you can put that money on the line. And we're going to use the same formula. So let's say we're not going to look at another chart, but let's say hypothetically our stop loss is at $8, and then our entry price is at 12, or make it 10, make it simple, 10. And again, we're using 2% compute. Now we can use another $1,000 of our account on another position. So another stock, let's say we want to look at Amazon or something like that, where we see a similar setup that we want to take advantage of. And what this does is it simply sets you up where you're not losing a whole bunch of money. You're not putting your account at risk into one play. So if one play goes wrong and another play goes right, you can still be in a good position where you're not losing money, and you have a great opportunity to grow your account. So that is how you position size. That's how you use your position size calculator when you're determining what trades to get into, when to get into these trades, and how to set them up. If you have any questions, let me know down in the comment section down below, and I will answer them for you either in a video or some type of comment. And that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed. And I will see y'all next time. I'm blessed to invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.